Hey everybody. Well, listen, there's a fair bit going on out in the economy right now today. We've got rising interest rates, we've got inflation, we've got rental prices going through the roof. There's a lot happening. So today, this is just a short little sharp video with Lisa Gazella from Collective Financial Services. And we're going to talk to you about how to handle rising interest rates. Lisa, welcome aboard.
Thanks for having me, Tony.
All right, Lisa. Look, you recently put out a great post, Lisa, and the first thing you're telling people out there is don't panic.
100%. Banks actually use an affordability rate, which initially approving your loan. So it's set at about a 2.5% above the actual rates. So unless your financial position has deteriorated since then, there's no need to stress.
Absolutely perfect. One of the things that we talk about when it comes to money and finances, if you do feel that you're going to be in a bit of a vulnerable position, is to get on the front foot. So what should people do, Lise?
100%. So best to speak to a mortgage broker. I'm happy definitely to have a look at your loans, consolidate any personal loans, credit cards, or bad debt that you may have. We can also put your loan back to 30 years if you are struggling to meet your repayments, but also just put extra repayments into an offset account or a savings account just to factor in these rate rises that are potentially going to keep increasing.
Absolutely great advice. And, swinging your loan from a 25 to a 30 year, there's different ways that we can sort of help people from a cash flow perspective. So as we talk about cash flow, one thing people should probably do, and we teach this all the time, is they've got to either increase their income or decrease their expenses. So now's probably a good time for people to talk to you about their home loans and also their cash flow, because we look into that sort of thing. And, if we can make some changes of $50 a week, $100 a week, makes a big difference to take the pressure off.
100%. And I also advise just to have a look at your savings accounts and all your credit cards. Look at ways where you can, if you're not using a gym membership, close it off. If you're not using these monthly, spending habits that are coming out, or see ways that you can actually reduce costs. Look at what you're actually spending each month.
Yeah, well, what about Netflix and all the sort of, what have they got now? There's Netflix, there's Stan, there's, oh, God knows. People have got that much stuff. It's unbelievable. They probably don't even realise how much they're paying out every month. Cool. So, right. So, look, one thing people really want to have a look at is, are they better off switching loans? Because there's a big thing going on between the banks and all the various lenders out there. They're fighting for business, right? So what should people do when they want to sort of look at their current loan? Do they switch it?
Okay. So really it's important to have a health check every 2 years on your home loan. So right now there's over 30 different lenders. So going through a mortgage broker, you've got actually real choice. There's so many banks that are so competitive at the moment, not to existing customers, but actually to customers who are looking to do a switch. So there's cashbacks up to $4,000. One of the banks is offering 300,000 reward points for people to travel. So, definitely speak to me. I'm happy to have a review of your home loan and make sure that you're on the best rate. So those savings are actually going back into your pocket.
Oh, look, that's fantastic. I mean, rewards points for a bit of travel. For those of us that live in Melbourne and had 2 years of bloody chaotic lockdowns, I think we all need a holiday, at least. So,
100%.
Look, the message for everybody here is we've got a link in the chat box, okay? And you just click on that link. Do a personal financial home loan review with Lise. She'll check out where you are, where your rates are at, what are you currently doing? Is there a better way to set yourself up and restructure yourself? Because we're going into some times here where people haven't seen interest rate rises for almost 12 years in Australia. So a lot of people, this is going to be pretty new to them. So I suggest don't go to your bank. They're only going to keep you locked in and keep your debt. Go to Lisa, talk to Lisa, because she's going to show you how to get the best rate, get the best deal, as we've done for many clients over the past few years. And folks, for today, that's what we want you to do. So click the link below, book up an appointment with Lisa, and we'll get you started.
Awesome. Cheers. Thank you.